Trump claims his new era of protectionism will mark a new golden age for America. It's more likely to usher in a new age of economic doldrums, not just for America, but for Britain and much of the global economy. That Britain got off relatively lightly in Donald Trump's maelstrom of tariffs shouldn't obscure the more important fact that it's nevertheless the end of global free trade as we've known it since the end of the Second World War, and a return to a pre-war era of protectionism. Now the development is good news for an open trading economy like the UK, whatever tariffs Trump wants to charge us. The president announced a new 10% baseline tariff, the minimum that all countries exporting to the US will have to pay, including Britain. For countries running big trade surpluses with America but protecting their domestic markets with tariffs of their own, Trump announced a set of penal reciprocal tariffs. These were rather arbitrarily calculated by adding up a country's tariffs, non-tariff barriers, and any currency manipulation to make its exports cheaper. This results in an exaggerated figure for other countries' tariffs, allowing Trump to divide it by two to establish the scale of America's reciprocal tariffs, so that Trump can claim falsely that he's really being generous. So China faces 34% tariffs. In fact, it's 54% if you include previous tariffs. India and Japan, 24%. The European Union, 24%. Britain remains on the 10% baseline. Overall, the average tariffs for goods exported to the US will now be 24%. That's higher than the notorious Smoot-Hawley tariffs blamed for prolonging the Great Depression in the 1930s. Last year, the average US tariff was 2%. So Trump has erected a protectionist wall over 10 times bigger than before it was around America. Of course, some countries might move to cut their tariffs in the hope Trump will do the same. Vietnam, which faces a 46% reciprocal tariff, looks like doing just that. But others, China, Japan, the EU, are more likely to retaliate, sparking a series of tit-for-tat, beggar-thy-neighbour policies, which always result in shrinking world trade, slower growth, perhaps even recession, or worse. Prices also rise behind protectionist walls, and there are predictions that US inflation could increase to over 4% before the year is out, reducing the chance of further interest rate cuts to come. And companies mollycoddled from foreign competition, well, they simply become less efficient over time. Trump's nationalist vituperation for foreigners, depicting them as plunderers, scavengers on the US economy, was nasty, unnecessary, and mistaken. The US has enjoyed unprecedented growth and prosperity these past 70 years. It was largely the architect of the trade rules under which it prospered. Even though powerful new economies like China emerged to challenge the US, America has held on to its 25% share of global GDP for decades, unlike, say, Britain or the European Union, whose share of global GDP has declined. The British government indicates it will try to conclude a trade deal with America which will reduce the 10% tariffs it currently faces, not forgetting that 25% for cars and vehicles. But Trump seems to regard that 10% as an irreducible minimum. After all, he's predicted tariffs will generate trillions and trillions of dollars in new revenues, which is ridiculously fanciful. But if he cuts his tariffs too much, he'll get very little at all. The British economy is already weak enough to be hauled below the waterline by even 10% tariffs. The American economy is also stuttering. As stock markets plummet almost everywhere, the chances of a global recession are rising, which would bring the UK economy to a grinding halt. Trump claims his new era of protectionism will mark a new golden age for America. It's more likely to usher in a new age of economic doldrums, not just for America, but for Britain and much of the global economy. So let's start with what it means for Britain. The British government breathed a collective sigh of relief when it was revealed that the UK's reciprocal tariff would only be 10%. It's the Trump minimum. But as I said, such is the fragility of the UK economy that even 10% could knock out what growth there is for 2025. Britain exports £60 billion worth of goods to America each year. So to put it simply, that £60 billion has just become £6 billion more expensive, which some Americans will no doubt decline to pay. The UK government hopes an economic deal in the works will lower tariffs against British exports further. But that could be easier said than done. Let's speak again to Jack Barnett, the Times economics correspondent. Jack, if the US economy slows down, as looks like doing, if the global economy slows down, which would probably follow a US slowdown, even 10% tariffs would be bad news for the British economy, would they not?
Yeah, that's right. Afternoon, Andrew. Obviously, we've had this enormous announcement from the president overnight. I mean, when I woke up this morning and checked my inbox from the response from the city and the analysts who obviously across this sort of stuff, I mean, it was pretty much unanimously saying, A, this was a lot worse than what everyone was expecting, and B, there's going to be a heightened risk of a global recession over the course of the next year. Now, the big question, I think we should go back to, which is obviously the sort of whole thing which has permeated over Trump's presidency so far, the very, very short presidency which we've had so far, is whether or not this stuff actually sticks. Like, are we going to keep these tariffs there over the long term? And if they do stay around for some time, if he's not minded to negotiate with specific countries and put down tariffs on specific sectors, the risk of a global recession is just that much greater to what it was beforehand. The UK is obviously going to be caught up in that, and there's going to be certain sectors within the UK economy which are going to perform worse than other ones. It's worth reminding that there's also this 25% tariff on car imports into the US. I mean, the UK, about 10% of the UK's exports to the US are actually automobiles. So that sector is going to be clobbered quite hard by this protectionist trade strategy from the president. So again, it all goes back to this uncertainty of whether or not this stuff does stick around. If it does stick around, it's plainly going to be bad for global growth. It's going to be bad for the UK. And first and foremost, it's going to be bad for the United States as well.
The Business Secretary has just told the House of Commons that the government is launching consultation with business, British business, on possible retaliatory tariffs. I would suggest we're not going to retaliate. That's not going to happen.
No, and if we were to retaliate, I mean, it's likely to result in two things. One of which will probably push up inflation a little bit in the UK, which is currently at 2.8%. It's obviously going to make the cost of importing stuff from the US a bit more expensive. That may then drive consumers away from purchasing those goods. They may change to other imports from other countries which may be relatively cheaper. That would obviously also complicate the Bank of England's progress towards cutting interest rates if inflation is that little bit higher. It's worth reminding that the Bank of England actually thinks inflation is going to go up to around about 4% in the summer. So if the government was to respond to the flat rate 10% tariff which the president announced last night on the UK, and if that was to push up inflation a little bit further than what we're expecting, you're going to get a double whammy hit there to the economy from A, consumer demand might sort of sag in response to those higher prices, and then B, the Bank of England may actually cut interest rates fewer times than it would have done if we didn't impose those tariffs.
The government still seems to think it can do better, even though it's come out relatively well from yesterday's statement, with some sort of trade deal in the works with Donald Trump. But I wonder if that's realistic. I got the impression from the Rose Garden last night that Donald Trump regards that 10% minimum as irreducible, that he won't go below that. And we were already on 10%, except for cars and steel, of course.
Exactly. I mean, the sort of the tone of the spectacle that we saw last night was, this was almost like Trump was almost doing a favor to the American people. He was packaging this package of tariffs up as saying, we've been ripped off for decades. He was talking about previous presidents allowing this to happen. Obviously, that would be previous Republican presidents as well, who's also allowed this to happen. And he was trying to set right the wrongs which had happened in the past. And that sort of tone, the way he was delivering that speech yesterday, which obviously went for over an hour, it sounded if he wasn't minded to have specific negotiations with specific countries. I think you're right, Andrew, in saying I think that the flat rate 10% is probably where we're going to end up in the long term over this on most countries. I would be amazed to see whether or not some of the really punitive tariffs on some of the Asian countries stay around. But again, it goes back to this level of uncertainty, which the president's engineered into the global economy. No one knows whether or not he is minded to negotiate with specific countries. No one knows whether or not he wants to continue with the flat rate 10%. And no one knows whether or not he's going to announce additional tariffs for additional sectors going forward. So again, we did get some certainty last night with all the announcements, but I just don't think the level of certainty which investors need to be confident to be investing in stock markets, and also consumers need to be spending their money. I just don't think it's there quite yet, and we'll probably see the fog sort of disappear in the coming months.
Yeah, and if you're an investor, you would think twice about opening new plant and facilities in America if there's still a risk that you do so, and then Trump lifts the tariffs, you didn't need to do it. Now, Britain's Prime Minister, Keir Starmer, he said, look, the president has acted in what he sees as America's interest. So our Prime Minister, he's going to act in Britain's interest. Fair enough. But do we have any idea what that means?
Well, I mean, I would probably say if you ask most economists in the city, maybe responding forcefully to the tariffs last night, which were announced by responding with their own 10% tariffs, is probably not going to be in the interest of British people. As I said earlier, it's probably going to put up inflation a little bit. It will probably result in interest rates being that bit higher, and it just makes the production process of a lot of things a bit less inefficient. I mean, the same arguments apply to what the US is doing in terms of the criticism of why this tariff policy is so damaging for the US economy. The same arguments apply for any other country which is retaliating against the United States tariffs as well. I think the big sort of unknown of all this, as you sort of briefly just mentioned there, Andrew, is whether or not this does actually result in a lot of companies going to the US and increasing their manufacturing base in order to evade the tariffs which he's imposed yesterday. I mean, it's worth remembering. I know there's a lot of complaints about the manufacturing base in the US being hollowed out and lots of production has been outsourced to Asia and China. I mean, there is a reason why that manufacturing base did leave in the first place, is because it was more efficient to produce that stuff elsewhere. So, if these companies do go back to the US and they do start producing the stuff they were producing elsewhere at a cheaper price, it's only going to result in the end user, i.e. the American consumer, paying more from that product, which they otherwise could have got without the tariffs being there.
And I see, Jack, some predictions that American inflation could well be over 4% before the year is out. Jack, we'll leave it there. Thank you very much for that. Jack Burnett there, Times economics correspondent.